After 60 years with my bank, I discovered this about my pension. The bank will never tell you this about your pension, but I will, at 85 years old. I'm going to tell you something that happened to me 3 years ago, and still keeps me awake at night when I remember it. I was sitting in the waiting room of my bank, in those hard plastic chairs that seem made so you don't stay too long. At the next table, separated only by a small glass counter, I saw something that chilled me inside. An older man, probably around my age, was facing a young employee who spoke very quickly, using many technical terms, moving papers and pointing at figures. The elderly man nodded and signed. He nodded again and signed again. When the employee stood up for a moment, I leaned towards him and asked quietly, "Do you understand what you are signing?" He looked at me with a mix of embarrassment and fear that I recognized instantly, because I had felt it myself for decades. He replied almost in a whisper, "Not really. But it says it's to improve my pension." That phrase haunted me for weeks because I had been told that same phrase 15 years earlier. Word for word. And I nodded too. And I signed too. It took me 5 years to understand what I had signed, and how much that paper, which in theory was to improve my pension, had cost me. I am 85 years old. I have entered banks for more than 6 decades. I have signed things that I didn't fully understand. I have paid fees that I didn't know existed. I have accepted products that I didn't need because someone in a suit told me they were good for me. I have learned the hard way things that no bank will calmly explain to you, because if they explain them well, they won't sell them to you. Today I tell you all this not as an expert, but as an elderly person who learned at a high cost. And I want to ask you something. If at any point you recognize something that has also happened to you, write in the comments, "The bank to me," and finish the sentence. We have remained silent for too long out of shame, believing that the mistake was ours, when many times it wasn't. When you retire and start receiving your pension, something happens that at first seems pleasant. The bank begins to pay more attention to you. They call you by your name with more warmth than before. They assign you a personal advisor. They invite you to sit down, offer you coffee, and ask about your family. After years of being just another customer, waiting in line, handling paperwork at the counter, without anyone paying much attention to you, suddenly they treat you as if you were important. That attention has a more honest name than the one they give you at the branch. It's called business opportunity. The bank knows exactly who you are the moment you retire. It knows that from now on, you will receive a fixed and predictable amount every month for the rest of your life. It knows that you probably have some savings. It knows that you have less energy to spend hours reading 20-page contracts, filled with terms that are not part of everyday language. And it knows that, statistically, older people trust institutions, with which they have had decades of relationships. That combination makes you a very valuable customer. And I don't say this with malice towards banks. I say it as what it is. A reality of the business that is worth understanding before you sit down for that meeting with your personal advisor. What very few people check when they retire is the actual state of their accounts. Not the balance, but the cost. Your checking account may be consuming money every month in fees that you never consciously activated, which have been charged automatically for years and appear on the statement with such generic names that it is almost impossible to identify them if you don't know what you're looking for. Maintenance fee. Administration fee. Digital banking service fee. Debit card fee. Fee for transfers to third parties. Charge for receiving the statement in paper. Card protection insurance that no one remembers signing up for. I paid a monthly fee of €6 for more than 12 years without any awareness of it. I discovered it the day I sat down patiently, with a clear table and all the statements from the last year in front of me, and started reading line by line, not just the big figures, but every transaction, every small charge, every concept I didn't remember generating. €6 a month amounts to 72 a year. Over 12 years, that small silent charge cost me more than €800. Without my conscious authorization. Without anyone explaining it to me. Without anyone warning me that I could ask for it to be removed. When I went to the bank and asked about that fee, there was no drama. There was no discussion. The employee reviewed it, confirmed that it was linked to a package of services I wasn't using, and canceled it in 5 minutes. 5 minutes I could have had 12 years ago if someone had told me I had the right to ask. My neighbor Aurelio was the one who opened my eyes. One day, while having coffee, he asked me if I had the commission sheet from my bank. I didn't know that such a sheet existed. I told him no. He explained that all banks are required to have it available for their clients, that it is a document where all applicable commissions for each product and service appear, and that any client can request it at any time for free. I went the next day and asked for it. I read it that same afternoon at home, calmly, with a pen in hand. I found 3 commissions that were being applied to my account of which I had no knowledge. I returned to the bank with the sheet, my statements, and my questions prepared. 2 of those commissions disappeared without any resistance. The third was indeed linked to a service I was using, but at least from that day on, I knew what I was paying for and why. That is already a form of control that I didn't have before. The biggest financial mistake of my life was not a monthly fee. It was a signature. At 70 years old, I was called to the bank to discuss my retirement. I was received by a very knowledgeable person, with well-presented materials, with colorful graphs showing how my money could grow over time. They explained to me that there was a specific product to complement the pension. That it was safe. That it had guaranteed returns. That it diversified risk. That many retirees were signing up for it exactly at that moment in life. I nodded. I pretended to understand more than I did. I asked a minor question so as not to seem ignorant. And I signed. What I didn't ask was the most important. I didn't ask what would happen if I needed that money before the agreed term. I didn't ask what the exact penalty for early withdrawal was. I didn't ask under what specific conditions the capital was guaranteed, and under which it was not. I didn't ask who would bear the losses if the market fell. 3 years later, I had a serious health problem. I urgently needed money to cover unforeseen expenses. I went to the bank to retrieve what I had deposited. It was then that they kindly explained to me what the clause I had signed without reading carefully meant. The penalty for early redemption took away part of my money that I took years to recover emotionally, not just financially. They didn't lie to me. That's the hardest part to accept. Everything was in the paperwork. But the way it was presented highlighted the benefits in bold and the risks in small print at the end, in a long paragraph that began with a soft phrase and ended with the real conditions buried among technical jargon. Bank employees have sales targets. They earn when you sign up. They have no real incentive to ensure that you fully understand the negative consequences of what you are signing. What I learned from that experience is a question I have never failed to ask since then. What happens in the worst-case scenario? Not in the best. Not in the average scenario. In the worst. What if I need this money early? What if the market drops? What if I want to cancel? How much will it cost me to get out of this? If the answers to those questions are not clear, simple, and understandable, the product is not designed for you to understand. It is designed for you to buy. The second thing I learned was not to decide on the spot. To this day, when someone at a bank offers me something, I have a prepared response that I always use, without exception. I need to think about it at home. Give it to me in writing so I can read it calmly. And if it's a good product today, it will still be a good product next week. If they tell me that the offer expires today, that already tells me everything I need to know about that offer. The urgency in personal finance almost always benefits those who create it, not those who feel it. There is something that no one tells you, and that I discovered too late. The bank where you have your pension set up is not the only bank that exists, even though it may seem that way for decades. For 40 years, I was at the same bank. Not because it was the best, but because changing seemed like a hassle. Because I didn't really know how to do it. Because I had all my bills set up there. And just the thought of reorganizing everything seemed like a huge job. That inertia cost me money for 4 decades, and I didn't realize it because I never compared it to anything. The day I sat down to compare banks for the first time in my life, what I found surprised me. There were accounts with no maintenance fees. Accounts that didn't charge for transfers. Accounts that didn't require any linked products to be exempt from fees. The bank switch, which I imagined would be a complicated operation, took me less than a week. In the first year after the switch, I saved more than €200 just in fees that I had previously paid, without questioning them. But the review went beyond the checking account. I reviewed all the products I had linked to the bank over the years. I found a life insurance policy I had been paying for over 15 years, and whose coverage no longer made sense for my current situation. I found a card protection insurance that I didn't remember contracting and that renewed automatically every year. I found an SMS alert service that charged me monthly and that I had never consciously activated. I canceled what I didn't need. I renegotiated the terms of what I did need. I learned to make transfers and inquiries from my phone to avoid fees for counter transactions. Just with that cleaning, without changing my essential life habits, I started saving around €40 a month. It's not a fortune. But it's almost €500 a year that used to disappear without leaving a visible trace. What really changed wasn't the amount of money I saved. It was the attitude with which I started entering the bank. For decades, I entered the bank as if I were asking for a favor. Like someone who needs something and therefore accepts the conditions presented to them. Entering with that attitude puts you at a disadvantage from the very first moment, even if you don't notice it. The employee perceives it. The dynamics of the conversation reflect it. I started to enter as who I am. A customer. Someone who brings their money to that institution and has the right to understand exactly what they do with it, what it costs to keep it there, and what they receive in return. I began to ask questions without apologizing for not knowing the answer. I started to request explanations in simple language without feeling uncomfortable about it. I began to say I don't know and explain it to me again without feeling ashamed. Because financial shame is one of the most silent and costly problems affecting older adults. Many men and women of my generation grew up in a culture where not understanding something a professional explains is perceived as a sign of clumsiness. That feeling pushes one to sign without understanding. To nod in order not to seem ignorant. To leave the meeting with papers that you haven't fully read because asking a second time seemed too much. But not understanding financial jargon is not ignorance. It is the logical consequence of a system designed with a complexity that is not always necessary. Financial contracts are not difficult to understand because the concepts are. They are difficult to understand because they are written to protect the drafter, not to inform the signer. You have the right to understand everything. You have always had it. And exercising that right does not require a degree in economics. It requires one thing, the willingness to ask without shame, as many times as necessary, until the answer makes sense. Today, at 85 years old, I manage my money better than ever. Not because I am smarter or more prepared than before, but because I stopped believing that the bank and I had the same interests. The bank is a business. It is not a charitable institution. It is not a neutral advisor. It is a company that needs to generate profits for its shareholders, and part of those profits comes from the products and services it sells you. That does not make it an enemy. But it does make it a counterpart with its own interests, and when they sit in front of you with a proposal, it is worth remembering that they have thought much more about that proposal than you have had time to think. Read the papers before signing. Always ask for a copy to take home. Inquire about the worst-case scenario, not just the best. Request the commission sheet and read it line by line. Compare with at least one other entity before committing to something important. And if you don't understand something, don't sign it. It doesn't matter how urgent the employee is. It doesn't matter how reasonable the verbal explanation sounds. If it's not clear on paper, it's not clear. That's what 85 years taught me about money. And I won't stay silent anymore. Write in the comments, "The bank to me." And share your experience. How many stories like mine are waiting to be told? How much money is lost in silence for not asking one more question? Take care, read the papers, ask the questions. Don't sign anything you don't understand.